Well, I named the show Mega Earnings on Deck, but should I change it to Wacky Wednesday? We got stuff moving all over the place. Prasad, clean out your desk. You're out at the FDA. You're fired after 3 months. Like I said, we got some earnings to cover. Bookings, interesting commentary we're going to have on bookings. You have an offering by SoFi. What a surprise. We'll dig into the details of that. New guest from Wedbush, Steve Massocca, joining us at 8:35. Get an overview of the markets. Let's get the show on the road on this Wednesday.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, we survived another deep correction yesterday. Now back up 7.25 handles. Quiet overnight session. Caught a bid right away. The buck on the rebound, trying to sneak into the 99 handle. Maybe go with triple digits. TLT flat 87.16. USO down slightly after that big day yesterday, 79.52. GLD and SLV going the opposite ways. GLD up 60 cents at 306.85. SLV down 12 cents, 34.54. And Bitcoin, that's just stuck here in a trading range, up $230 at 118,525. I want to bring on Triple D, and Triple D, I want to welcome all of our listeners over there from Financial Juice. They have joined us starting on Friday. We want your input. We want you to feel a part of the crowd here. So big shout out to Amar and the people at Financial Juice. Good morning, Dennis. Are you juiced up for today's session?
Of course, and juiced up for last night's session too. So many random headlines breaking last night. So we've got 100 earnings reports we could cover, and obviously we can't cover 100 earnings reports in an hour, but we'll try to cover 5 or 10 of them. So give us your earnings report, the ones that you want to cover. Obviously, we're going to cover the big ones there as well. Tonight's the night, though. I mean, Microsoft and Meta and Robinhood and ARM Holdings and the list goes on and on. Qualcomm, Ford, LRCX, Carvana, there's big ones reporting tonight. So we're going to get into the heart of earnings season tonight. Tomorrow night, Apple and Amazon, 4 of the big 7 reporting within 24 hours of each other. It's going to be wild. It's going to be market moving. It is going to dictate the next path for the overall market. A lot of people think we have Fed decision here today. A lot of people think that the Fed is going to dictate the next move. I think they'll dictate the move at 215, but I think overall the next big move is going to be dictated by what the mega cap 7 have to say.
Okay. Earnings, everyone could talk about earnings on Wall Street, but Prasad out at the FDA. 3 months. Holy mackerel.
Yeah, so Vinay Prasad has resigned, not fired, resigned. We don't know if he was pushed out. We don't know behind the scenes what is going on here, but he is out. He is gone, reported by Adam Fierstein. If you don't follow Adam, follow him on Twitter. He breaks so much biotech news. So Prasad is out. He was hard. He was going to be hard on, obviously, getting drugs approved. We knew that when he went in. XBI got hit when he get in. So it's logical that XBI would bounce when he is out. XBI is getting a nice bounce here. Was up more last night, has faded a little bit here, Joel. If you just go to the intraday chart, the pre-market chart here, you'll see the fade here. Because last night, how high did we get on the XBI?
XBI, wow, 87.60 is what you got to. So you leaked a little bit.
And even on Robinhood last night, I saw some 88 prints. So it's pulled back a little bit from there. Still up significantly. It's a nice day for the XBI. Direct stocks benefiting from this. Right away, you think Sarepta, because we know he was skeptical of that approval ever happening for their drug there. Maybe rightfully so, because a couple of people did die. But Sarepta getting another news pop here. Got one yesterday morning, popped and dropped, or 2 nights ago. Went up to 22 and then fell off to 15. So we get another snapback rally here again. Sarepta bulls dancing around this morning because Prasad is out, basically saying, that This obviously is very good news for Sarepta, and it is good news for Sarepta because he was skeptical of it. Is there going to be follow through? There's still that same issue of overhead supply. 20, 21, 22, so much overhead supply. And Sarepta has come off its after hours highs as well.
Yeah, I mean it's well. First, I want to go broad here, and I wanted to go the XBI because a lot of people like to trade that ETF, and you just have a fantastic level here, and the XBI does give you these kind of setups here. You just have major resistance here. Let's just call it $89. Let's make that line a little bit thicker. 87.24. I mean, I can't tell you how many times you've seen this kind of setup in the XBI, and it just fails. I mean, it's $89. I mean, you make that 3, 4, 5, 6, 7 star, whatever you want. Monthly high this month, and then also going back to March. So that's the big level. Trading range support well defined too. So tradetherange.com, you're buying at 86 and 85.5, and then getting out a little bit early, 88.50, 88.70. Sarepta, I mean, this stock is just all over the map, and they took opportunity yesterday. They got the news, they hit it. Pre-market levels once again never seen. I don't know, up to 20. I would say it's been such a fade off these much higher
Guilty
open.
until proven innocent.
Yeah.
I think you got overhead supply all over the place here, and it worked for us the other day in STN, fading a 22, 21 under JV spec, held it for 5 points. Great job on your part, the short that was. It's another gift. I don't know if I'm fading it as much here because this is good news here, but like 2 nights ago, it seemed like a no-brainer fade. This one doesn't seem
Now
as
it's
much of a no-brainer here. But
yeah.
the fade trade's been working, and the fade trade's been working overall in stocks here too. We'll get back to that too. One more stock off the XBI headline here with Prasad is REPL. It's your big mover up of the day, Replimune. Obviously, he was skeptical on this drug as well. Stock got killed when they didn't get approved, or we got the rejection notice just 6 days ago from 12 down to 3. Now that Prasad is out, there's obviously people speculating that, hey, maybe this drug gets a look here again. REPL is your big winner of the day, up 78%. It's a huge move, getting back half its losses. But again, you run into overhead supply that a lot of people have been killed on this, and they'll probably be happy to get some of their money back here this morning. I don't think it's filling the gap anytime soon.
This has to be one of the most difficult charts to ever. This is where we're at. Where we're
Middle of
trading. $7. $7. You're right here, folks. That's even a little bit high. So you're gapping into a gap. If you guys have a technical setup for this, let me know. I mean, all the people that did the scooping down here, like, oh, I didn't get caught in this stock. Oh man, $7. Yeah, thank you very much. So that's for REPL, and you can see as the news broke, it really looks like it was pretty orderly. And then the algo was getting involved this morning, and I don't know. I'm just $7 is sticking out to me just because it's a nice round number. Don't know if there's been any icebergs there or not, but nice move in the biotechs.
So before we get to the earnings parade, one other one I want to get to, and the chat is talking about, and they're excited to talk about it, is SoFi. They reported earnings 2 days ago. The stock popped, obviously, yesterday, up to $25. The fade trade happened. I know Mary had a great trade in our STN room. Congratulations there. 25 closes at 22.40. And then what happens after hours? We're covering it live in the Stock Trader Network room. Was they issued a shelf, and the stock went down to about 22.10 on the shelf. And then it pops all the way back up to 22.30, 22.40. Well, we've covered this before on the STN. When you get the smaller companies issuing the shelf, and what a shelf is, and maybe Brent would be the best to describe this because he obviously ran the news desk. And Brent, you're in the background. Hey. If you can come in just quickly, tell us what a shelf is, because some people may not know the difference between an offering and a shelf, and it's a big difference.
So an offering means they know they're going to do it. They have defined terms for what kind of securities they're going to do an offering. Maybe they don't have a size. A shelf is creating allowance for management to go access financing via the stock market. They are registering an offering, but they're not like making effective the offering. The shelf allows management to put up on the shelf. I like to use this analogy. They put it on the shelf, and if they want to access that financing, tap that financing later, they can go grab it off the shelf and do another disclosure that says, okay, remember that shelf we registered for a few months ago? We're going to do an offering. Maybe it's debt, maybe it's warrants, maybe it's stock. The case of SoFi yesterday was like textbook example of the progression of these offerings, because it wasn't a few months later, it was immediately after. And they did, like you said, Dennis, they did their shelf offering filing first. Then they did another filing that said we were going to do a common stock offering. And then within a few minutes, they had issued a press release that said we're going to do a common stock offering, and here's the size that we're going to do. So with the SoFi, you got to see the full realm of how companies possibly could do a shelf offering all the way to an actual common stock offering.
We've taught this in the Stock Trader Network, but we'll quickly teach it to you guys here as well, is the shelf comes first. And Brent, you did a great job describing it. So I'm just going to take the trading aspect of it. The shelf comes first. So when there's a shelf, an offering often follows. Now, Apple, Microsoft, big companies do shelves all the time. They do debt. They may even have common stock in there. Apple, Microsoft aren't issuing common stock. So there's no worries about dilution there. A company like SoFi that just ran from 12 to 25 has a high probability of likely issuing common stock, and maybe quickly. So they get the shelf out there. So and the algos hit it down the shelf 30 cents. And then it popped back last night to scratch. It was trading at 22.35, 22.40. And I'm like I said, I'm going to try the short here, because I wouldn't be surprised if we do see an offering here tonight. The offering came 1 minute later, and the stock now, has fallen $1.50. Now, I get out way too early like I always do, but I mean, that was a gift last night. So, if you're trading in there and you want to learn this stuff, this is what we cover. Stock Trader Network, you got lots of people looking at charts. We're looking at how the headlines work and making money off the headlines. I know JV Spec, you had an awesome trade on that one too. So basically, shelf comes first, and then often on smaller companies, the offering soon follows. And that's what happened with SoFi last night. They did price this offering here now at 71 million shares at $20.85. Now, when you get these pricing here, sometimes that can act as a floor, but also it's kind of like a magnet. So it wants to suck into that price. So if it's at 21 and the price that comes out at 20.85, kind of sucks down to that. That's how, it often works. Now it's trading below it right now, which is never a good sign. You want to see it more as a floor. You never want to see it trading below it. So if you're long the stock, you want it to get back up over that 20.85, because right now, anybody who's participating in the offering, if they didn't anticipate getting the shares and actually short the stock ahead of it, if they're just getting them now, they're actually underwater here. So that's never a good sign either. But 20.85 probably going to be the magnet level for SOFI.
A couple more things here. So with this shelf, something to consider, and Dennis, tell me if you think I'm not correct here. With this shelf, SoFi can go back and do more financing at some other time if they want to.
Yeah,
right?
It depends on the size of the shelf. So they issued 71 million. And what did the shelf say? Did it say
the shelf was
shares?
No, the shelf had no size disclosed. So that's kind of why I'm saying
they could throw more.
So they could go through more. Absolutely not saying that happening. I'm just trying to, express how a shelf works. And something else to consider here, which is interesting in my opinion, SoFi just had earnings a couple days ago. The stock moved higher on the earnings. How did the size of the move on the earnings report and the size of the move for this offering compare?
Well, I mean, you look at Brentster
and question for you.
Yeah, so I don't know the size and how the offering works, but what I will say is this stock, already had a pretty good reversal off of earnings. So you had people concerned probably, not that they were going to issue a shelf, but when you get the pops, the companies are automatically thinking, oh, let's sell. This is always the risk. When you're chasing smaller names and they're having ridiculous moves, there's always a risk that they throw an offering at you, because a lot of these companies, you're not in huge, strong cash positions. So when the stocks rise substantially, especially like smaller biotech names, you almost always see shelves and offerings follow after a successful trial, because they need money to finance the next trial. So companies still needing money or that aren't cash rich will see their equity prices go up and say, hey, here was SoFi at $12, $13. Now we can sell it at $21 or $22, ends up being at $20.85, and make some money from that. So that's the consideration always there, Brent, is that when you have big pops in stocks, very rapidly like that, then you obviously, and I'm getting distracted because I'm trying to trade at the same time.
All right, no, yeah, I could just let me hop in here. That segment brought to you by the CFA Institute. No, it's great information. I think for me, I just look at it. I think it's a smart management move. I mean, you have appreciation in your stock price, unbelievable. You can bring some money to the company. I'm just a little hesitant. Some of these offerings have just gotten snapped up, right? I mean, like that MP offering at 55. So they're
Yeah,
good, yeah. So I think you got a great number. I mean, after all that crazy price action yesterday in it, I was so surprised. It just opened actually up near its low, got over $25. And pull back. But you got one number. You got 2085. So look at that as resistance. It gets above that, then we'll just see it to scoop it up. But yeah, a couple of nasty candles. Brent made a good point. They gave back all the gains from the earnings basically, and that they're looking at the offering. So we'll see. We'll see how the market digest all that information. For SoFi down $1.70. Hovering at that offering
where
level.
we're really bouncing around here, I'm getting distracted because
I know what's going on. Is there
That's
something?
ADP. ADP just came out here at 8:15, and I'm like, sold, bought, sold. I'm like, as I'm in the middle of my sentence, I was like, okay, forgot about the ADP, which is all of our bad here. Brent, do you have the ADP number? It looks like it was a beat.
It was a beat. 104,000 jobs for the month of July. Estimates were for 77,000 from economists. So a nice little beat there. A little bit of price action. We also did get breaking news, if it's cool to jump there. CyberArk confirming a deal to buy Palo Alto. The other way around. Palo Alto confirming a deal to buy CyberArk. Thank you, Dennis. Terms is $45 per share in cash and 2.2005 shares of Palo Alto. This is representing equity value of about $25 billion. The press release says it's a 26% premium for CyberArk shares over the closing price last week.
So those who bought this now 50 are getting disappointed here because there's no more premium here. And we've seen this with the deals, the same thing with NSC. It's like all on the rumor, the premium's all baked in, and there's nothing else to be had. So it's probably been the case like to more sell the rumors here because you're taking a risk the deals don't go through and the stocks go back down, and you're not really getting rewarded at all for holding through that risk. Now, CyberArk, Palo Alto are going to have less antitrust concerns than NSC and UNP. So what I will say is this deal could probably go through a little more quicker and probably less scrutiny, but could receive some scrutiny here too. So CYBR, PINW obviously trading down on it as well. It was already trading down on it yesterday, now trading down on it after the confirmation here. So risk arbs will take over here at that ratio, 2.2. Thank you, Brentster.
Does this surprise you a little bit? This takeover?
No,
okay.
It makes sense because we have too many cybersecurity stocks, and it makes sense that they're obviously, you're looking at an Israeli company, maybe they're trying to get more of a presence, elsewhere. It makes sense to me. Now, the initial thought always on these deals is sell the acquirer and obviously buy the acquired company here. So risk arb, sell first, ask questions later. But I don't think this is a bad deal for PANW. I don't even think they had to pay that much of a premium. So I kind of like the deal. I kind of like, consolidation. PANW has always been the powerhouse. Now they're even more of a powerhouse here. So I kind of like the deal.
Any more consolidation in the CrowdStrike? No, that's traded down $1.51. All right, interesting. That explained. That helps me out a little bit. Okay, 8:20 earnings. The after hours ones weren't quite as exciting. Dennis, pick your poison here. Do you want to go Visa, Starbucks, Seagate? where you want to go?
Well, there's a million of them here that reported last night. And I'm
Right.
going to start with Bucking because they said so
Oh,
many
yeah.
interesting things. The CEO was on CNBC this morning and said a lot of interesting stuff. So the earnings for Bucking, and we can just grab them here quickly, or if somebody's got them,
I
can
got
bring
them.
up
I got
myself.
them. I got
There
them.
you go.
It was a
Yeah,
big old beat. Boy,
it
this
is.
company makes some money.
They do.
55.40 versus 49.85. Sales 6.8 billion versus 6.54 billion. They see Q3 sales. That looks okay. That's in the range. But I I don't listen to CNBC much. I had it on this morning, and there was some really interesting commentary by the CEO.
Yeah. That's what I was watching there too. He's just talking about the international traveler. And we've speculated on this show for a long time that hey, geopolitical risk, could hurt travel into the US. Well, don't shoot the messenger, but the BKNG confirmed all of our speculation here this morning. And he said international travel to the US is down significantly. So, obviously Trump's not going to, he's going to say that's BS, but it's coming from Bucking. I mean, who's going to know better than the CEO of Bucking? So jumping, just into details, he said, we're analyzing, and he says our numbers are still good because we're an international company. He says the international traveler is traveling elsewhere. He says because bookings are up to other countries, but he said it's down to the US. He said Canadian obviously is down significantly, but he's also talking about the European traveler. Now he's like, he says we can't blame that they're broke because they're traveling elsewhere because bookings are up elsewhere, which is why their earnings were good. But he says, so what do we point at? He says, we point at the geopolitical situation. So he basically said that people are just a little more concerned to travel into the US. He blamed visas. He also blamed the lines at immigration. He said some people were complaining about 3-hour waits at immigration. And he says all it takes is one of those people to talk to their friends and say, oh, I traveled to the US. It was great. Had a great time down there. But man, I had to wait 3 hours in immigration. It was just terrible. He says that will turn people off from traveling to the US. So he says they're definitely seeing a decline in US bookings. And who's going to know better than the booking holding? So take that with what you will, but it's something to think about. Like I've been saying, I don't know about Disney. Some other people were saying maybe you got to look to Vegas. We're going to get MGM earnings tomorrow night. So that's something to think about, or tonight actually. So that's something to think about too. But as traders, we've got to be ahead of those trends and understanding that I think travel to the US is down and could start showing up in the numbers. And for certain companies, maybe an Airbnb, maybe you got to be thinking about those too. But do your homework. We're just throwing out some different ideas there on that. Travel to the US is starting to go down.
But to US, but they mentioned that they're going other places, so it really didn't hurt their earnings, right?
Didn't hurt booking. So the international, so that's what I'm saying. The international companies that have a lot of international presence probably aren't going to feel any pain. It would be small, and a lot of these companies are obviously private, smaller businesses. You think about smaller businesses even in Florida, like that, could suffer. If Canadians aren't traveling as much because they have all the snowbirds go, down to Florida, if they're not going to travel as much this winter. And again, you've got to think about that too. Is when does this really start to show up? It starts to show up when it starts to get cold because you get the northerners coming down to obviously be in the warmth. If they aren't coming down as much, that's going to harm earnings too. So maybe we're a little bit ahead of this trade. Maybe it's early, but booking is seeing it now, which is concerning to say the least.
Really tough to do technicals on the $5,480 stock. Just it's way off the pre-market low. If I had to look for this, I just look of areas where there is a bunch of levels. I just call it 53. I mean, that's so far away. Next, I'm not even going to try and mess with it. They need to split the stock is what they need to do. Let's see how Expedia is doing. EXPE.
Down a bit.
Trade. They did. I don't think they reported yet, did they?
No,
I don't remember covering it.
I don't think so. We're pretty early in the earnings season here.
Yeah. So. What's the little one that people like to follow? Trivago or something like that?
Well, there's a bunch of them. TripAdvisor's another one there too. So there's a bunch of these travel companies here, and and the one thing to consider is that the booking move is an extreme, Joel. So we can look for sympathy. I'm going to just take a second to teach something here.
Sure.
So when you're looking for sympathy moves, when you have a 1% move in the leader, a 2% move in the leader, it's often not enough to really drive sympathy plays. When you have a 10% down move in a leader, that will drive sympathy plays. That will drive. And maybe this is a good progression into Corvo, QRVO earnings from last night, because they came out with some good numbers. It is an Apple parts supplier. And stock is trading up substantially here this morning, up 9%, 92 cents versus 63, 818 million versus 775 million. So nice be on the top, nice be on the bottom. They raised guidance substantially, up looking at $1.75 to $2.25 in earnings versus $1.63 estimate. Sales raise as well. So beat, raise. That's what you want to see. Stock popping significantly here, up 9%. So SWKS, when you have a move like 9% up, that's going to drive sympathy. So there's the big four that often follow this. SWKS is there. We were talking about these last night in the STN room as well. Skyworks. You have Light, LITE is another one. It's trading up 1.3% there. Used to be AVGO, but Broadcom is not just an Apple parts supplier anymore. It's an AI company. So AVGO is taken out. We don't do that one anymore. The other one, Cirrus Logic, often trades with it, CRUS. That's trading up about 1% here as well. So you can see clear sympathy moves when you have the leader really moving. And don't think like when a leader moves 9%, the sympathy stock isn't going up 9%. They usually get a quarter of the move to a third of the move. So 1 to 2, maybe 3% tops. That's the sympathy plays. And that's how we trade those.
Okay, all right. We covered the gambit on there.
We have to. We got so many earnings, so we're gonna be flying here this morning. So if you see a technical level that you want to talk about, Joel, just interrupt and we'll do some charts on it here.
Nothing. No.
If not, then we'll just keep flying here because we got 1,000 things we could talk about this morning.
I would just say for these stocks,
we're in a fast news market.
We're in a fast market. Fast. That's what they used to do. A quick story. I know this is a tangent, but like in the S&P pit, like when things, they usually show like the last 6, 7 prices on the board, and there'd be a guy at the walkie-talkie, quarter trade, half trade, whatever trade. But then when it just got so crazy, they didn't know what was going on. They would just put fast, and then try and put one price up there. So we are in a fast market. Do we care about Visa?
Yeah, we do in the context of XLF probably, and in the context of, the traveler as well. I mean, Visa is, used when you're traveling to American Express, MasterCard. So we can do Visa here too. 298 versus 283, yep. 10.17 billion versus 9.82 billion. This is a beat on the top. This is a beat on the bottom. There's really not that much to hate in this report here. But again, we are in this market where we had Todd Gordon on this show. You were talking with him, or was it in the STN room? Maybe it was in the STN room. I get confused because we have people on both places. He was talking about, last week about how 80% of companies have beat earnings. So it's been a really decent earnings season. It's the reaction to those earnings that is concerning. The reaction to those earnings have not been great. We saw IBM was fine, the report got hit. Visa, I would say this is a fine report, got hit. The bar is simply higher. It's a tougher earnings season. Last earnings season, the bar was on the floor. We had the tariff concerns and everything, and anything the company said that were okay, they were rallying the stocks. We are not in Kansas anymore. We are not in that market. We are in high bar territory for a lot of companies. So we're seeing companies come out and beat earnings and raise guidance and actually go down on those beats and raises. So it's a tough market to be long stocks into earnings, actually. So, we are seeing some companies, is always going to be exception. It's not like, 100% of companies are going to go down. 100% of companies, never. If 55 go down and 45 go up, though, that's an edge for us as traders. So just imagining, I've said this before, when you have a bias on the short side, sometimes it's good to short every company into earnings. If 55% go down and 45% go up, you're going to make money. So these are edges that we try to look for. And Visa right now trading down 8 points, probably just due to just simply too high of a bar.
How about our straddle traders here? We are $4 off the low, so that puts it like at one point it was down 12.50. I have the straddle expected move a little bit over $13, so optionality came into there. Dennis, you turned on the Visa and MasterCard. It was a while ago, and they've held up okay. But this big red
All right,
bar
we're gonna
here.
interrupt you again. We have economic data. We're doing a really bad job at it today.
Q2 GDP preliminary reading. That's the first reading, better than expected at 3%. Economists were looking for a 2.5% move higher for GDP. Again, this is the preliminary reading. This is the first of 3 GDP readings that we will get for the second quarter. Stocks were initially moving higher on that better than expected print, now coming back down, kind of like unaffected here a little bit.
Yeah. So bounced a little bit, dropped a little bit. This isn't CPI. This isn't a Fed decision, but it's something there. GDP up too. Like I don't think anything. I think DJK is making the point here. I mean, none of the data we got here today is conducive to think that the Fed is going to cut rates today. And I know Trump thinks, yeah, Powell's going to do the right thing. He's going to cut rates today. Oh, I know he is. He's not. The spoiler alert, he's not cutting rates today. No, never. Not happening. Zero. I know it's a 2.7% chance in the Fed tool. I'm going to tell you it's a 0% chance here today. He's not cutting rates today. Now, the question is the commentary. Does it set up to cut in September? Maybe. But you got strong GDP. You got strong ADP numbers coming out here today. I mean, none of the numbers here that have been coming out from, economic numbers have really said, hey, we better cut rates pretty soon because the economy is falling apart. The opposite of anything. The economy is kind of heating up. So I would say there's absolutely zero reason for the Fed. I've been on the record to say I don't even think they're going to lower this year. I think there's a case where Blue Putnam made in our chat, obviously, that if they do indeed lower rates this year, it's going to be because we start seeing a slowdown in the economic data.
Yeah.
We're not seeing that slowdown yet. So stop worrying about rate cuts here because they're not coming right now. And the TLT says that too. It's down 40 cents.
The TLT, the old lie detector test. I mean, I save it for when we need it, right? I mean, I don't know, but no, we got to get ahead of it. We got to get ahead of it. I mean, I'm just not sure. We'll get that decision at 2:00 today, and it will be more the tone of like September or what he says for the year. But I'm sure the Elcos will be all over it. We got to pop. This is just like an initial feeling. We did have a sell off yesterday, and we did recover, but just that quick spurt that we had out there. It just felt like it was offered. Like, after yesterday, after the Fed meeting, it just seems like we've had an incredible run. So right now, I don't know. It feels like we're so close to all-time highs. If you're not ringing the register, ahead of the Fed or whatever, that's the way it's feeling right now. Pre-market high right there, 64.1750. And then it came right in. So we'll take a look at that. Do you want to sneak in one more earnings report here before our guest?
Yeah, let's do one more. We'll go to this morning here. A stock that everybody loves to trade is VRT, Vertiv Holdings, and it's the AI darling here. And here's an example of a bar that's really high, but a story that is just so hot they don't even care that the bar is high. 95 cents versus 83 cents, 2.64 billion versus 2.35 billion. They raised guidance up 94 cents to $1. And it's not even a big raise, but it's a decent enough raise. They also raised the full fiscal year from 345 to 365 to 375 to 385 EPS. So beat, raise off the races. VRT continues here. Stock was $53 back in April when everything just got so overdone. Now $151. The stock has almost tripled here in 3 months. So again, this is a situation where maybe we've run too far too fast. I would not chase this. It could even be an upside capitulation at this point in time. I think this stock needs to cool off before chasing it, but the story's still hot.
Wow. Wowzer. If you were up early this morning, you had a target of 163.60, you would have gotten it because it got to 163.62.
Oh my gosh, people are so stupid.
Eclipsing the former all-time high by $8.
That's ridiculous.
Yes, Dennis.
Especially after the move that we've had. And it's not like they raised guidance by like 50% here. I mean, this is impressive. It's good numbers. But the bar is super high here. I would not be the least bit surprised if this pulled a SoFi. where we had, the good numbers, the good earnings, and everybody buying in the pre-market because they can't help themselves. Everybody gets algos, get excited. The retail guy chases, and then they go up, and then all of a sudden, they get to the market open. It's like, oh, everybody bought that already wanted to buy, and now the leak started. Well, this has already started a leak here. So I love the company. I've owned the stock in my long-term portfolio a couple of times here. Would love to have it back, but not chasing it here today. I think if you're chasing here now, you were the last person entering this party.
We'll stick with the number that we had before this, 155.84. That was your all-time high, your yearly high. That was made in January. You're still $4 away from it. That would be a level I'd be keeping an eye on here for VRT. 8:35, right on the dot here, and we are going to bring in our guests from Wedbush Securities. Hey, Steve Massocca over at Wedbush Securities, a managing director, having a little bit of camera problems. Steve, can you hear me?
We just lost him. It was so good. It was going to be ready to go. See, he's going to get his internet fixed. So we're back. He's going to work in the background.
He looks a lot like Brent. He looks a lot like Brent.
It's Steve. It looks like Brent. No, it's okay. So we just lost him. He was actually right there. So Brent's will work with him.
We can get him back. Yep.
Do you remember the Cheech and Chong? It's Steve routine. Oh, come on. Where he's banging on the door. Come on, please help me out with this.
Steve is banging on the door now, so we're going to just interrupt this skit here that you wanted to go into because Steve is ready to come back on here now.
Okay,
we just lost him here for a second.
Good morning, guys. Can you hear me?
Good morning.
Yeah, we can hear you.
For some reason, I've got a sketchy connection to you guys. It keeps coming in and out, but hopefully you can hear me.
Okay. Yeah. We're doing okay here. So tell us about your role at Wedbush Securities.
We're freezing up here again. Okay, we'll let Steve work on his internet in the background.
Wait, Steve, can you just turn your camera off maybe, and we'll give that a try?
His audio. That might help.
Yeah, maybe turn your camera off.
Well, my role at Wedbush is I manage two different funds. One revolves around our research department's best ideas. So that's not really something I contribute anything to more portfolio management. And then I also manage a dividend-based hedge fund that invests in high-yielding equities, mainly in the United States. We've got some Canadian holdings and some international holdings, but typically we're buying stocks that trade in America. Very much a value bent. We're looking for companies that yield at least 5%. We hope to buy them at something less than 10 times cash flow, and we love to see insider buying. About 65% of our portfolio has had insider buying in the last 24 months.
Okay. What about the market?
In addition, market here, well, I think there's a big value discrepancy between large cap and small cap right now. You've got the S&P 500 trading at something like 25 times. You've got the S&P 600, the small cap S&P trading at something like 15, 16 times. If you're thinking that's because of profitability, you have to be profitable to be in the S&P 600. So it's unlike the Russell 2000. And in fact, the S&P 600 up until recently was down in fact, it still is down 2.7% this year, where the S&P is up 8%. And this just continues this pattern of what I call indexation, which is people just blindly throw money into the S&P index funds because they're told that's the right thing to do. Well, it's been the right thing to do over the last. But soon, at some point, it may no longer be the right thing to do. And, when that is, no one can tell you. But I don't like the value.
Right. It 22 times earnings look a little pricey. So you're looking at the
Joe, we lost Steve again. So we might have to
internet connection.
Steve's have to reschedule.
Yeah, we'll have to reschedule Steve here.
He'll
Sorry
probably
about that, Steve,
that's
if
okay.
you're
He'll
still-
probably jump back in. I'll keep him in the background and I'll try to give him a heads up in our background chat. But we can continue with the earnings. I'm sure you guys have more earnings.
We have a lot of
to
content here, so we'll let you guys work for a couple minutes. If we can get a few more minutes of Steve, we will work with that in the background there. The internet connection is just too dicey to continue there. Yeah, so many companies reporting earnings here from last night to this morning here. So we just covered VRT. What I want to cover is Etsy, ETSY. I had this in my acronym, my trading acronym, FADE, which was Fade Trade, which worked awesome for the first half of the year, and then AMD, Dell, and Etsy was the other one. I picked Etsy because I kind of like the valuation. I needed an E for the acronym. But I bought all these stocks. I own them all in my long-term portfolio. Etsy, I bought a 55. It was doing good. It's up to 65, then just peeled back. Maybe people nervous ahead of the report here. And then the report actually comes out, and it seems to be okay. Stock is popping here this morning here. They got a bottom line miss here, but I think there was obviously some adjustments here because the stock is not trading down on a miss. And the sales beat substantially here. So I think there was actually some adjustments in those numbers. But Etsy looking okay here this morning. Joel, give me some technicals here. Should I hold this? Continue to hold?
I don't know. I mean, if you get a look at it's all about 66 here, Dennis. It was a big miss on the gap, so maybe there is a an adjustment in there. 66. That's it. That's all you got to keep an eye on. Got up there in the pre-market. That was the recent high. So it's resistance until otherwise notified. 66.31, the high of the move. Pre-market high, 66.11. So there it is. Get above 60. I mean, it's got, to me, I think you should hold it, Dennis. I mean, you always say you sell too early.
I always do. I get out of everything too soon. Look at Roblox.
Oh, I knew
that I screwed up so substantially. And I sold it back because I was nervous. The whole tariffs thing was going on. I didn't think it was over, and it popped back. And I mean, it's just continuing. Michael Pachter gift wrapped this for us on pre-market prep, $50. He said it was a double. Man, it doubled like 4 months later. So awesome call by Michael Pachter on that one. It's just been a monster. RBLX has just been a monster. It's what I do. You know, I get in usually at pretty good prices, and then I end up getting out too soon. I need to start to learn to hold better. So maybe I should just hold this whole acronym by the end of the year. The one stock I've held really well, and maybe not so well, was AMD, because I got way up in it, then I was down in it, now I'm back up. I need your holding. I need those diamond Joel Elconin hands here.
Just don't
Joel
look. I told you not to look. I just tell you not to look, and you always look.
But you know what the biggest problem is that everybody else, because we're full disclosure, and it's easy to hold your stocks when you don't do a podcast. But when you've got a podcast and people are like, what are you doing with the stock? What are you doing now? What are you doing now? And they're asking you about your portfolio continuously because we publicly disclose, on Stock Trader Network, all of our holdings. They're always asking, what are you doing with it now? What are you doing with it now? So that gets you thinking about it. And you're looking at it. I was like, well, I'm just holding it long term. Well, I get that question every day on AMD. Are you selling? Are you selling? Are you selling? Are you selling? Are you selling?
Really?
All the time. Every day. Every day it comes via Twitter. Sometimes, it'll come via, chat. It'll come different ways. But because when stocks go up, people are so wanting to sell, and they want to know that, because maybe they came in because it was my acronym. Maybe they came in because I've been talking about AMD nonstop for the last year and a half, but they feel like I know when the top's going to be. I don't know when the bottom's going to be. I don't know when the top's going to be. I just believe in Lisa Su. And I believe that AMD is market cap is a fraction of NVIDIA's, and I believe there's a lot of room for growth there. So I'm just holding AMD. That's one I put in the retirement account, trying not to look at it. We do have Steve ready to come back here. We think we've improved the internet connection. We'll try it one more time with Steve, see if we can get that internet connection good now. We're going to add Steve back in here.
There we are.
Steve?
Can you hear me?
We do. We do, actually.
Okay, great.
That
Sorry.
sounds like that's
reason.
Brent calling. I think
Yeah.
that sounds like the bat phone.
It is the bat phone. And I don't know why it's ringing at this hour. Anyway, I'm glad we got the internet working. I'm going to move back over here because I'm closer to the router. That's the problem.
No problem.
So what's going on, guys? How are you today?
Good. We really appreciate you working with us here. We did talk about the S&P being pricey at 22 times earnings, and how you're perhaps looking at IWM to play catch up. Steve, being a market veteran, signs of speculation, rampant speculation, meme stocks running, stock like Vape the last couple days. I mean, it's hard to say that it's symptomatic of a top because this market keeps going higher.
Well, yeah. So who knows when it ends? I'm old enough that I remember the sock puppet, which you guys may or may not. And so back the first internet bubble, it went on and on and on and on. And this is nothing. What we're seeing today is nothing. Stocks like Vape would go from $2 to $400 in 3 days.
Yeah, that's true, actually.
Yeah, and so, but we're cruising so use an old term here. We're cruising for a bruising. Some of the stuff that's going on in the marketplace is not advisable. As someone who's been doing this for literally 40 years, I've been making my living on the stock market. I got to tell you, it's getting a little dangerous here, and it's making me nervous about growth stocks. It's making me nervous about large cap, because people just blindly buy large cap now. Oh, I have friends. Money, I just buy the S&P 500. Why do anything else? The S&P 500 is great. I don't pay any fees. It performs terrific. So it's become this sort of, everyone just takes their money and automatically puts it in the S&P index fund or the Qs. And, at some point, this is not, I don't know when. I can't tell you when. All I can tell you is that it will stop working at some point.
And it's the same stocks here, Steve, to a certain extent. Like, they're going into tech, and it's like there's so many forgotten sectors here where, we see other stocks trading with PEs 8, 7, 9, but they don't have a sexy story and they throw them out. Healthcare has been an epic disaster. Merck's at valuations we probably have never seen before when it's trading at 9 or 10 times earnings, but nobody cares about Merck because there's no sexy AI story. And then you get stocks like AMD. You get stocks like Vertiv that go up every single day, no matter what. I was like joking the other day, AMD goes up all night and it goes up all day too. I mean, and I'm long AMD, but this has been an incredible run for some of these stocks here. And I agree, like, we are overbought on so many levels on a lot of different names here right now. What turns it? Like, what's the turning point that says, hey, this is just overdone here? Like, maybe we can't time it. But what
we're guessing. We're guessing. How about Jerome Powell actually raises rates just to be?
Don't go there.
Oh, you're getting.
Yeah. So who knows? Who knows, right? Who knows what Vladimir Putin does tomorrow? I mean, who knows what ends the market? As I wrote in my last quarterly letter, my crystal ball is not working. I really got to stop using it. But my scale seems to work fine, and when I buy cheap stocks, that usually works out. So. I try to trade based on what my scale says as opposed to what my crystal ball says, if that makes any sense to you guys.
So you talk about, a potential disruption in the market. What keeps you up at night? What worries you? Is it inflation coming back? Is it this debt? Is it the budget, geopolitics? What keeps you up at night?
All of the above. Another virus. This AI thing implodes. I saw a phrase for the first time. I hadn't seen it in a while. Quoted as an actual fact in Barron's, the lead article in Barron's, I believe last weekend. It said the AI bubble, like the AI bubble, and then it went on to say something about it, like this bubble exists. And is that true? I don't know. Maybe AI is just the beginning, and these things are super cheap. I don't know. But I can tell you they're expensive, and it won't take I can't tell you what it's going to be, but there are numerous things that could happen, that have happened in the past, that will drive market valuations lower. And we're starting from an elevated place, so it's a very concerning risk. And I guess what keeps me up at night isn't so much what might happen, is the fact of where we're at today, the valuation we're at today. Not in my portfolio. I'm very comfortable with my portfolio. It's trading at like 8 times cash flow and paying dividends. But
what's in your portfolio? I got to stop you right there. Which stock? So I like 8 times cash flow.
Yeah. Well, first of all, let me tell you right now, we own over 100 stocks in the portfolio because our view is we're playing the odds. We like the fact that we're getting the dividend, the insider buying, et cetera, et cetera, et cetera. Why not have as many bets as is available? So we have a very broad. The fancy business school term is idiosyncratic risk, which is essentially single stock risk. So we eliminate single stock risk by doing that. But what do we largely own? We own a lot of MLPs. We own a lot of BDCs. We own a lot of mortgage REITs. We own some big caps. We own British Petroleum. We own Kraft Heinz. We own Western Union. Unfortunately, if you saw yesterday, we own Whirlpool. But we also have, we've got 3 holdings that have market caps less than 100 million out of the 115 or whatever that we own. I would say if we had to base it on a cap weighting, we're somewhere between a mid cap fund and a small cap fund. But, you know, we own Chevron as well. So.
Okay. All right. We had GDP print today. And we have a Fed meeting today. So you talk about more rocket fuel for this market. I mean, rates eventually sometime coming down. Who knows if it's going to be in 2025. Talk about the numbers that we got today, the Fed meeting, and the potential course of interest rates.
Yeah. So the big number to me was the price index, which was 2.5 versus an estimate of 2.3. So it's still, you know, inflation isn't an issue, but it's certainly not below the 2% that the Fed is, that Jerome Powell, you know, will step to the mic and say today, when he doesn't lower rates, and I agree with your colleague there that rates are not going to get changed today. He would look like an idiot if he changed today. He looked like he's totally collapsing. Trump.
He looked like a puppet.
Yeah. So Trump has put him in a position where he can't lower rates. Anyway, and now with this data out, it makes it even easier. So rates aren't coming out, and you know, this 2.5. We'd like to see that come down even more. And with the GDP growing at 3% and everything that's going on, it might be that we're stuck at some level above 2%. Does that mean the Fed doesn't lower rates ever? I don't think so. It might mean that Jerome Powell doesn't lower rates ever, but he's going to be gone, obviously, in less than a year. And there will be then there will be a puppet in place, and rates will come down. And I think that will be bullish unless we really have a significant resurgence in inflation. I don't think the market's going to care between 2 and 2.5. If the Fed is lowering short-term rates, that's good news for stocks. And I believe that will happen, but it won't be Jerry Powell. Well, it might be, because he might, you're right. Today he can walk it back. He can make his comments today, and he can say, you know, and all along they have talked about September being the next time they lower rates. And so maybe he throws a quarter point or half a point, probably a quarter of a point in September, just to show like he's not being an obstructionist. That's what I think the most likely outcome is.
Are we done with inflation? Core PC price index 2.2, 2.3. So we have to not worry about inflation anymore?
Well, it actually came in at 2.5, but I think that's safe to say. I think unless some event, you know, another COVID kind of thing happens, we're so good. We're so good at doing everything. I mean, because my mom had a smartphone when she walked into Safeway. Safeway'd be bankrupt right now. I mean, my mom was, you know, had coupons pouring out of her purse. You know, she was gonna, and so now with a smartphone and with all the information that's available to consumers, it's really difficult to see 70s kind of inflation coming back unless it's driven by some horrific monetary policy or some kind of egregious, you know, warlike event. Technology has put a secular disinflationary trend in place.
Okay. All right, Steve, thanks for joining us here at Pre-Market Prep. We worked out the technical issues. Great insight on the markets. We'll get you back on again soon.
All right. Thanks, guys. Take care. Have a great day.
Thanks, Steve.
And the reason you guys didn't remember it's Steve is because from the Cheech and Chong, it's Dave. Dave's not here. That's still not registering with you?
When I read it in the chat, I remembered it, but I feel like I was a little late on Cheech and Chong.
Okay.
So,
All right. 8:53. We're up 6.5 handles, having a nice day here. Let me get my charts back up here, and we can finish. We did get some tickers. We got some tickers. Do we care about the analysts today, Dennis?
Yeah, there's a couple of note. I wrote down Peloton for you, Joel, gets an upgrade to buy at UBS. And here's a stock that, you know, has been dead for a long time, but when it gets a buy rating out of nowhere, it's going to be a mover. So, I mean, you can look at ratings and say, oh, AMD, here's another analyst chasing price, or here's, you know, this one's out of the blue. So this is a contrarian call. Stock's been the dog of dogs, and they're getting a buy rating on it. So UBS upgrading it to buy, and stock is up 8.7% here today. I got to go jump into this note and see if there is some color here. So UBS, they're upgrading Peloton to buy from neutral with a price target of 11. Positive view is driven by upside to EBITDA 2026 from top line growth and further cost cutting. Proven and underlying data, we have been watching Peloton. Favorable risk reward and undemanding valuation that implies the stock is trading at 6 to 7 times EBITDA when cash flows are inflicting. So they like this as valuation here. I never really thought about Peloton as a value stock, but UBS thinks it's a value stock. I don't know if I'm on board with this one, but it's getting an 8% pop.
Full disclosure, Lisa did sneak this one out of the portfolio.
She's out.
Yeah,
Lisa's out.
yeah.
Finally out.
When I did that review for the site, we're going through everything. I'm like, where is it? Where is it? And I'm like, I don't want to know. Peloton. I mean, I don't know when the last time I went on my Peloton. I mean, it had good use when I needed it, but man, if I could be outdoors swimming, walking, biking, I mean, I don't need it even in the winter. But it's a pop. I mean, right here, 50-day moving average, 672. Let's get technical. Let's build a bid here. Let's sustain it. But I mean, monthly's ugly and everything's ugly about it. So we'll see. We'll see if it can get a bid at this 50-day moving average.
The other one of note, and I don't have color on the note here, but DZ Bank downgrading AMD to sell. And the reason I'm covering AMD is this is not your typical analyst chasing price. This is the analyst coming on and saying, hey, too far, too much, too fast. They put a price target of $150 on the thing. So they're saying, it needs to come in. And you know what? It has come a long ways. Like I'm still lying, didn't sell any shares. I don't intend to sell any shares here today because I think the story is going to continue to accelerate. But is it due for a pullback? I think so. I tell you, if it goes back to 150, I'll buy more though.
Do you have it where he was previous on this stock?
Downgraded. Let me go look. Downgraded from buy to sell. So he skipped all the way down, not at neutral. So Ingo Werman is ringing the register from buy to sell.
Okay, I respect that. I mean, if he was just like some new guy coming out and new firm, I'm gonna come out with the sell ring. It's not down very much. It's only down a stick. You have a favorable market. I mean, if you want to draw some we could come up with some levels here for when this potentially could break down. I don't think it's going to be off this guy's sell rating. I mean, just keep an eye. If you're worried about it, if you take stock in this guy, high close of the move yesterday, 177.44. So see how the street reacts to that level today. I'll call that based on Steve, or not Steve, whatever the guy's name is. I'll call that resistance. Yesterday's low, 74.68. And then you got a $6 drop off to your 2-day. You got two $6 drop offs in your daily lows, 68.67, 62.36. So if you're afraid of heights, ring the register. I know you hate to do this, Dennis. You like to sell it when it's going straight up, but sometimes if you could just if you had just been moving your
I'm not worrying about AMD. You don't have to talk me into holding AMD. So my call is it's got a $270 billion market cap and NVIDIA's $4 trillion. I think the gap there is going to eventually close. And I don't think I still own NVIDIA. So I don't think the gap's closing by NVIDIA coming down. I think the gap's going to close by AMD going up. I think Lisa Su has room to accelerate growth here. They're talking about the new chip competing with Blackwell. I think Lisa Su is going to figure this out. And I think AMD is going to continue to be a huge growth story in AI.
All right. And there you go. Trading down a stick.
Marvell, MRVL. Multiple headlines here. Marvell Technologies. Yesterday, company announced collaboration with Rebellions to offer high-performance, energy-efficient AI systems tailored for regionally driven and sovereign-backed AI initiatives across APAC and Middle East. Lots of people crediting this headline for today. That headline was actually out yesterday. The move today is more related to Fubon Research, where Microsoft has upgraded specifications for its MAIA 300 chip, which Marvell is developing. So they're coming in here, and this is more of the headline that is moving Marvell up this morning. I do have MRVL in my long-term portfolio, so glad to see it. It's up 8%. Stock was way overdone when it got under $50. It's back into the 80s. Is this, been the best of breed? Hell no, but it was probably way, way overdone when it got down to 50. So it's coming back into range here. Joel Technicals, MRVL.
Is he hodling? Because he was talking about this one a while ago, or has your
I'm hodling
MRVL?
I've been holding Marvell for a while, a small position, not like AMD.
Oh, okay. Because I thought he was talking about this around 50. That was a while ago. But still hope he has it. You know me, I'm afraid of heights. 85.36 is your pre-market high. I- I'd say if you want to sell this today, have offers out there ahead of that level. If someone like right now, you get boom, you go out there at 83, you get lifted. Oh, okay. Well, they're willing to buy 83. Boom, throw a little bit more size out at 83 and a half. Oh, they bought that too. Throw a little bit more of a pile at 84. See if you get lifted there. I mean, I think that's the way I have to look up going to the pre-market high of 85.36.
So 9 o'clock, final
Woo!
thoughts. I will say, and what I have been saying is the bears are out of the caves. They're not hiding in the caves anymore. They have not grabbed control of this market by any means, but they are out of their caves and they're making cases for themselves. They're doing a little bit of feasting, maybe there's a close little fish to nibble on and they're knocking it down. So the bears are out of the caves, but the bulls are still have some control here. But breadth has been an issue here lately. We're starting to see stocks break down on good earnings reports here. We're a little bit long in the tooth. And I think Steve, is correct with saying, eventually it's going to be a rug pull here. We don't know what day that's going to come, but we're overdue for a rug pull here. We haven't had really a serious down day here, and I don't even remember how long. I can't remember the last real big down day. Like, we were down 1%. We haven't had like a 2 or 3% like hitter. That could happen here eventually. We're probably overdue for it. So I'm cautiously doing longs, but I'm still being very cautious here. Cautiously doing a little bit of dip buying, but definitely not going full bull rant mode here because the bears are out of the caves and there's a risk to the bull thesis. And with so much stuff happening in the next 24 hours, with the Fed decision at 2 o'clock, with Microsoft and Meta earnings tonight, with Apple and Amazon earnings tomorrow, there's so much fundamental information coming to this market. It's probably hard to make a bet here right now. Let's wait to get that fundamental information and let these earnings reports dictate where the market goes next.
We did have a minor 2-day losing streak, but I don't know when the last time we had a 3-day losing streak. Yep, we did back April 3rd, 4th, and 7th. So we're in the green now. We're up 350, really keeping an eye on the pre-market high. I think, I don't know, it just feels like, we really run a lot on these Fed days right ahead of the meeting and anticipation stuff. It just seems like, you're going to make an incremental new high, just kind of pull back a little bit, coming back on the downside, your pre-market low right there with the close. So we'll see if the bulls can defend that. So a lot of fun today here, run a little overtime on pre-market prep. Jay Woods joining us tomorrow as our special guest. Have a great day, everyone. Thanks for joining.